All right, so let me show you how easy it is to actually make a decent living. I'm talking about, making $500 if that's your goal a day and trading futures. Now, you don't have to spend a lot of time, meaning having a full-time job, working 9 to 5 and sitting in front of the computer for that length of time, 8 hours, 9 hours, 10 hours a day. You only have to do this maybe 1 to 2 hours a day, okay? Now, the New York session for here in the U.S. opens up at 9:30 Eastern time, and that's 8:30, Central time, okay? And I'm going to show you how I went about mastering a strategy that ended up working for me. I've been trading for some time now, and it has allowed me to make a living doing so. All you have to do is master the concept of market structure, understanding which way the market is ultimately moving. Are we breaking structure to the upside, or are we making moves to where the market is trending to the downside? Again, structure is everything, okay? So I'm just going to show you how I just kind of generally look at and determine the direction of the market real quick. So if we were moving to the upside, making higher highs and higher lows, because that's what structure is all centered around, we have higher highs and higher lows. Now, the strategy and how I trade each and every day surrounds supply and demand. You may be asking, well, what is that? Aggressive selling in areas of aggressive buying in the market. That's all we need to identify, okay? But we need to mark up zones, okay? Supply zones, demand zones, to be able to understand, once we determine which way the market is moving, which one we need to trade. So if we are bullish to the upside, making higher highs and higher lows, then we're looking for pullbacks. Let's say this is a structural break right here where the market made a high, low, or higher low, made a new high, taking out this high. This would be a demand zone, okay? Same thing here. This would be your most recent high, higher low, breaking structure above here, most recent high, broken to the upside, now a new high. So this could be an area of demand. So if the market is making this moves like this where it's trending to the upside, then look for pullbacks to key areas of demand to make continuations moves to the upside. Now, if the market is reversing, one of the telltale signs where it's going to probably make a reversal back to the downside is when when it's made its last high and then it's made its first low. Okay, all right, pulling back. All right, and then it makes a lower high right here. Okay, not taking out the most recent high. That's a telltale sign right there, especially when they come down. And let's say they break below an area of structure right here. This is going to be a high pullback, a lower high, and then breaking structure to the downside. When they break and take out an area of structure here, and then an area of structure to the left-hand side of the chart, that is what's going to be classified as the reversal, into which we can start looking for, instead of going back and looking for demand zones, aggressive buying to go long, aggressive areas of selling, meaning a pullback here to somewhere within this swing where there is an aggressive supply zone to go short off of. That's pretty much all the market is that you really need to understand. But the market is always doing something different daily. It's not always going to be clean cut and dried, being able to determine. Sometimes you may see where the market makes, let's say, for example, I'll show you right quick. Like right here where it broke above these areas on the move back to the upside. So it's making higher highs and higher lows. We do break structure, so now we're bullish to the upside. But below us are areas of minor areas of structure right here. And we have a low here and a high here. The market's taking out structure here. So now it's bullish, right? But then it starts pulling back to the downside and start taking out some of these minor areas of structure right here to the downside. So we, start to move from a bullish to a bearish standpoint, but we're not full on set to a, bearish mode yet, in a sense, okay, the sentiment, because you were kind of trapped in between a high here and a low here after the market it changed direction. So now it's what was making bearish sentiment direction to the downside. Now it's re-breaking back to the upside, taking out structure to the left. So now we're bullish. So we have a major low here and a major high here, and it starts to pull back to the downside, right? Breaking and taking out minor areas of structure. Yes, you can look for opportunities to go short, but let's say the market doesn't take this area here out, okay? This low it made, most recent low over here. Let's say it doesn't do that. but it makes a pretty much a pullback, makes a higher low, and then starts making moves back to the upside where it start taking out structures on the leg right here on back to the upside. So it's making higher highs and higher lows. So then you start looking for pullbacks to go long, right? So, but again, at this point here where it's making this pullback and it's kind of starting to move like right here in this area here, you're in between this leg here and in between this leg here. So the market is in a wedge because you have a major high and a major low here, and it has not made up its mind 100% which way it wants to move. That's why I always say wait for it to really make a move to where it's either taking out a major low or a major high, and then look for the pullbacks to go long. In this case here, like for example, it starts to make higher highs and higher lows, right? Taking out these areas of minor structure, even here, back to the upside. So you can look for a pullback to go what? To go long, because right here where it broke structure above these areas, it took out structure here, pull back. It's aggressive buying right here. This is a demand zone, and then you can look to go long, right? Okay, so that's what I'm talking about. Wait for it to take out either a major high or a major low. This is a major low. There's a high here, pulls back, doesn't take the low out, makes a higher low just to push to the upside and start taking structure out, minor areas of structure, but eventually it takes out this minor major area of a high right here of structure, and then pushes to the upside. Now you can come back here and then continue pushing to the upside. So, we won't know until the market opens up. But that's pretty much how I'm able to look at the market and determine which way to actually trade. Because sometimes, again, the market can move sideways where it starts to turn back around, breaking structure to the upside, pulling, and then you get the first pullback and not knowing, okay, is it going to take out a low or is it going to make a higher low and then start moving back to the upside again? So this is the point right here when you're in between a leg to where it looks like it could start moving sideways right here, okay? So you got to be very careful. Once it starts pulling back, and starts breaking structure coming back, again, this is going to be your major low. This is going to be your lowest point right here. So if it starts to pull back right here, just be mindful. You can look for opportunities if it's taking structure out, coming back down to the downside, these minor areas, to take a pullback going short. But it could turn back around and start re-breaking structure back to the upside, highs, higher lows, highs, higher lows, and taking out structure here on this leg as it came down. And then you can shift to start going back long, because now the market is in an in-between situation where it's you could trade either going short or long, okay? But you got to wait for structure to be taking some areas out. So I want to show you this kind of an example when it in regards to the actual strategy itself. But again, determine which way the market is moving. If we're very bearish, then you should just be looking for opportunities to go short. Just like right here, market pull down, pull back, pull down, okay? Supply, go short, right? You don't want to start looking for opportunities to go long until it starts to make higher highs and higher lows and start taking some structure out to the left-hand side of the chart. That's when you want to make up, that's when you want to shift from, okay, I'm going short as long as it's making lower lows and lower highs. But the moment it starts breaking and making higher highs and higher lows, making this move to the upside. So basically you get where it's doing, I just showed you, highs, higher lows, highs, higher lows, highs, and higher lows. Like right here, highs, higher lows, highs, higher lows is breaking structure over here. The market starts to shift. Pull back, go long, okay? Why? Because we took out areas of structure, all right, here, but we also took out areas of liquidity where it ran liquidity. Highs, higher lows, highs, okay? Breaking above structure, above these highs here. Equal highs just as well, taking out liquidity. Breaks higher, breaks above structure right here, pulls back here, demand, you can go long, okay? Just be mindful that it can react here because this is a high that it made off this swing here. So this would be the most recent high. Okay, and then what does it do? It starts to push to the downside. So when it comes to the actual strategy, you just first determine the direction in which you need to take your trades in. Bearish, pullbacks. If it's bearish, then look for pullbacks to key areas of supply. Aggressive selling, pullback, go short. All right, simply put. All right, you don't start looking for opportunities to go long until it starts to trend reverse to the upside. Highs, higher lows. At this point, I'm not looking to go long, even though we get a pullback here to demand to go long, because we could still, the market could go high, higher, low, right? Then make a high, and then you can come back and take out this low right here, and come back and take this low here out, and then we're back bearish. So it could do something like this right here. All right, highs, higher lows, higher highs. Then come down, break here, take out this low, pull back, and then break this low right here. Okay, and at this point, we've taken out a minor area structure. Here, I would be a bit more interested in looking for an opportunity for a pullback to go short than be going long. I'm not going to be interested in going long until it starts to take out some structure to the left-hand side of the chart. Okay, so you got to be able to 100% read structure. That's what I'm harping so much about in this video and in so many other videos. Now, when it comes to the actual strategy that you really need to master to be able to make money each and every day, just simply look for pullbacks once you distinguish or determine the direction of the market. Like, for example, this was a pullback. This was a demand zone here. This was a pullback to this area right here. This was a demand zone right here. Okay, so now that we know the market is making higher highs and higher lows and is taking out structure over here, we're just going to find an opportunity to do what? To be able to go long off of. So let's look at an area right quick. Let's look at where the market was actually trending to the downside, making lower lows and lower highs. We can simply see that. Look at it. Yep, nice pullback here, but then it breaks again. Okay, it does simply kind of make it does right here back on the 25th going into 26th. We do have a low here, and then it starts to make higher highs and higher lows back to the upside. And it does break structure. Let me see. Yeah, break structure above some areas as it's moving higher. So breaks it here. Okay. Pushes up, pulls back. It's making higher highs and higher lows to the upside, but then it starts to come back down. After, slightly reversing back to the upside. So again, this is going to be your most recent low. Minor structure here. As it comes back down, these are areas of minor structure. As it's coming back down, comes down, pulls back. So it makes a low, taking out structure here, pulling back. This is a nice swing to the upside here, coming back down, taking these lows out here. So we got a big swing right here where it's breaking structure below these lows here. Makes a new low, pulls back, lower lows, okay, pushing lower, low, lower low, low, lower low, low, lower, low, lower high, low, lower high, low, lower highs, and then coming down to the downside. I'm sorry about that, guys. Yeah, so low, lower high, and then coming down. So what we want to take a look at is that because we're so bearish coming to the downside, just look for opportunities to go what? To go short, right? Just like right here, go short, come down, low, new low. Pulls back, lower high, comes back, comes down here. This could be an opportunity to go short off of. But as you see here, they come up, they pull back, and they take out like this area right here, this high right here, okay? So they take that area out, and you can look for opportunity to go long right here. But this is around news, I believe, on yesterday, Friday. So, but anyways, and it does come back to the downside, taking these lows out here. So we're still bearish. Now we'll look for a pullback to a key area of supply. So I'm simply saying, as long as we're making lower lows, lower highs, look for the pullbacks to key areas of supply. Pulls back right here at 9:30, 9:40 right here. I'm going to show you right quick. This is how I do it each and every day. So this is I'm going to mark up my higher base zone first. Once I've distinguished or determined the direction using in reference to market structure, we're making lower lows, lower highs. I'm looking for pullbacks to key areas of supply. Aggressive selling coming out of this area right here. As you can see, there's a swing right here. The market reacts off of that swing right there. I'm going to mark it up. Okay, there's aggressive area of selling right here. Mark the area on your higher base chart to start with. Then move down to the lower base. And then when it pulls back, okay, so this right here is that low off the higher base chart. So start with the higher base chart, mark your zone up. Then move down to a lower base. Moving down, I'm using my 24 range. Retrace it back to the higher base zone, the big box. I'm going to look for a smaller supply zone on the inside. Push down, pull back right here, breaking structure. Actually, this was a high, higher, low, and higher, higher. It started coming down here. This little zipper, a little swing right here where it made a low, lower, high, pretty much. Well, little swing. This is a supplies area right here, okay, because it took out this area of structure right here when it came down. This where it made a push up, pull back, and then broke above this high right here. Then it reverses and starts to come back down to the downside, taking out this high right here. This is a supply area right here. So pull back to the large box, which is the higher base supply zone right here. Then you move down to your lower base chart. Wait for it to pull back to the lower to the higher base zone, and then look for a smaller, say, supply zone on the inside. So it's a zone within a zone confluence that gives it the confirmation to go short. Once it pulls back to the 24 range zone on the inside of the 120 range supply zone, then go short. Look for opportunity once you get the rejection, breaking close of the candle to actually go short. I talk about this in a lot of videos, guys. So that the strategy is not something that I'm just covering here in this video. I talk about it amongst tons of videos because I'm trying to hard and I really want people to understand how this works. But the key to it all, the glue that binds everything together, that's going to allow you to, so basically taking this one scalp, I could have been done for the day. All right. And just a matter of 5 minutes. Okay. Yeah, you may have to wait, but you're going to find a setup either pre-market or right closely after the opening of the market to be able to get into one solid trade, and at a max 2 trades a day if you want to, but trading at least 2 hours a day to find these setups to where you can make money trading futures is very simple to do. You take a one setup like this and you're done for the day. And I'm moving in the direction of the higher base chart. We are bearish, okay, to the downside. So I'm going to be looking for just what's key areas of supply setups. Beautiful area of supply. We don't start turning bullish until like what? Highs, higher lows, highs, higher lows. Yeah, we see the movement to the upside, but I need some more confirmation to go long, and that's going to be the structure breaks over here. Once it does that, it broke structure right here where it made these high. This is a demand area right here. I'm going to go long off this area of demand once it shifts, once the tide or the trend shifts, okay? But that's all I'm doing. I'm marking up based on structure the high probability zones. In this case here, we're bearish, so I pull back to key area supply on my higher base, and then just moving down to a lower base chart to find a more refined zone, meaning a supply zone on the inside of the larger zone. That's it. Okay, so I just want to kind of briefly talk about that today. But this is how I master trading supply and demand that allow me to make, just say you want to make a minimum of $500 a day or $1,000 a day or whatever it may be. You can make money each and every day just doing this, simply trading 2 hours a day. If you got 2 hours a day, okay, you can do this, and you don't have to just primarily focus on trading if you don't have the time to during the morning session. Okay, you can trade the afternoon session. Maybe you say, well, I can't do either because I work a full-time job. Then maybe you could trade during the Asian session or the London session. The market is open 24 hours a day, pretty much 5 days a week, okay? Business days, Monday through Friday, and then it closes Friday, opens back up on Sunday at 6 p.m. Eastern, 5 p.m. Central, and then you can do it all over again. It starts there, okay? But I want to share that with you guys. I do have tons of setups, okay? If you want to join the Discord is free. The link is down in the description part of the video. There is a private community to anyone out there that wants more relevant information surrounding trades that I actually take. These are trades that I posted over on the Discord community. There's a link down below right below the Discord link. Okay, it's titled Elite Channel Supporter. If you want to become an Elite Channel Supporter, it's only $6.99 a month. But that's where you get the full-on breakdown of trades that I've taken, so you can look for these similar type trades. But I'm walking you through my mindset in reference to structure, where to place your profit target, where to place your stop loss, letting you know the thought process behind each trade that I take. All supply and demand. Okay, all right, surrounding that concept of looking for and marking up a higher base zone on your higher base chart, starting from, for me, the 120 range. Then I move down to my 24 range chart, and I zoom in to find a smaller zone on the inside of the larger base zone to scalp and take a trade from. Okay, I'm not a swing and position style trader, but I'm scalping each day, and I only need one, max 2 setups a day to make money doing this. Again, the link to become an Elite Channel Supporter is down below. Click on it. Make sure to choose the second link for $6.99, and that's going to give you access to the trade breakdown videos. There's tons of them there already. The video playlist and the market structure video for anyone that's still trying to understand and learn that concept. I did a great video covering that. Again, the Discord is free if you choose to join. If you are not a subscriber and it's your first time watching, please take the time to go ahead and subscribe by clicking the sub button. Make sure to click on the bell once you, as soon as you click the subscribe button, so that you don't miss any other uploaded content. Now, if you found value in today's video, I know it's a little bit long-winded, but I'm re-emphasizing things on a daily basis and breaking things down because I want people to understand this concept, because it could be, it could be game-changing, it could be life-changing for someone that just needs some extra part-time money or to pay their bills with, or someone that's really trying to set make it a dream come true, a reality of trading full-time for themselves. Okay, so if you found value, make sure to click that thumbs up button, that like button for me. I definitely appreciate it. And I hope everyone has a great rest of the weekend. Take care.